Hello and welcome to the trade setup. Today we are taking another look at Nvidia, where we have the wave 1 up, the wave 2 down, and the third wave possibly finished, possibly still in the making. So within the third wave we have the green scenario, one of very many alternative possible scenarios which have very similar support zones, so I'm not going to add them on the chart at the moment. If we do end up going lower and breaking support zones and whatnot, or have more information on the structure, we can study and identify more alternative counts. But at the moment, in the green wave, we have one down, wave 1 up, wave 2 down, wave 3 up, wave 4 down, and wave 5 in the making. And as you can see on the chart, in the third wave we can clearly identify we have 5 waves: 1, 2, 3, 4, 5. And we would be looking actually at 5 waves for all the for all 5 waves within all the waves of this larger third wave in white. So the fifth green wave would also need to be 1, 2, 3, 4, 5. With that said, we could have the wave 1 up. It looks like we do, and that we also have 5 waves for it in 1, 2, 3, 4, 5, with the wave 1 that finished here and this being an overshooting wave B. We have the support zone for it, and I also have 3 scenarios for the correction that comes afterwards. And firstly, let's go through the blue scenario, where we have the wave A down, wave B up, and a wave C in the making. Now a wave C is formed always of 5 waves, so this would be a wave 1 in C, 2 in C, 3, 4, and 5 to come. This would take us to lower prices before we break a new high here. So if we break these highs, the blue scenario is not applicable anymore, and we can completely remove it from the chart. Alternatively, also in a bearish count, we have the orange scenario, where the wave A finished here. Now we are in a wave B with a wave C to come to the downside. In this scenario, while still bearish, even if it breaks above the latest highs, we can still expect it to go to lower prices and not form impulsive structure to the upside and go much higher. And these two would be the bearish scenarios, and we could also count here on the chart the yellow scenario, which is a wave A down, an overshooting wave B up, and the wave C down. And then now we would be looking for a 5 wave move up, and here it would be a 1 finished, 2 finished, third possibly finished. And if we hold the support zone here in yellow in wave 4 and complete the 5th wave, it doesn't matter if it breaks the latest high or not. It's more about the structure and based on extensions and how close it already got here in these latest prices to the high, I think we should break it if we are to form 5 waves up. Otherwise it's less promising, let's say. But if we finish these 5 waves up in yellow, we should be looking for 3 waves down, where in the correction we can find, if we can find support in the support zone that I will provide once we have the 5 waves up, we can look for new all-time highs with higher probabilities than normal. And it will be a 1-2 setup, which is the best setup you can actually find in Elliott wave theory when you trade based on it. I also wanted to mention we do have this, I guess I forgot to mention it earlier, we do have this red resistance zone, and it's based on price action, where we got rejected from this zone very many times here, and now we are struggling to go higher, and yeah, we keep reaching in and going lower. We got higher, we went lower, we got higher, we are now getting rejected again, and each time it seems that right now we are managing to push less and less higher before we find at least some sort of resistance, which could indicate that it's likely that we start to move lower into the support zone. So how could we tell the difference when should we expect the bullish count to work out, and when should we expect one of the bearish counts to work out? One quick mention, we won't be able to tell for quite some time if we are in the blue scenario or the orange scenario, unless we invalidate the blue scenario by breaking with the wave 2 above the start of wave 1. But yeah, if we don't, we can't really tell for quite some time. But between the yellow scenario and the other two more bearish scenarios, we have this support zone for the fourth wave in yellow. If we break this support zone, the likelihood that we go to new lows in this area increases drastically. It's still going to be possible to say that, okay, this is just a 1 2, and then now we are forming another 1 2, and after that we are in a third of a third, or of a third of a fifth wave and whatnot. But the more 1 2 setups you have, the less likely it becomes that they work out, and we are in the larger green 1 2 setup, and then we would have another 1 2 here and another 1 2 here, and it's already 3 1 2s, one within another. So yeah, the probabilities would shift drastically. It's also possible that we are forming a diagonal and we just have the wave 1 in 3 waves, but that's also very low likelihood of a good trade, and we are not going to focus on that too much. So for now, you have the support zone in yellow. You know that if we break this support zone, we are likely following one of the other two scenarios in orange or in blue. If we form 5 waves up, I will provide a new support zone, and we will be able to entry and get a good setup for pushing higher in the third wave of the fifth wave. If not, we have the larger support zone in green, and this is the trade setup. I hope you enjoyed the video and found it useful. If you did, don't forget to subscribe and let me know in the comments what else you want me to cover. I will continue to provide updates on this as it unfolds. And yeah, one thing before I finish, I want to mention that if we now move higher in this third wave in yellow, yeah, if the price actually goes higher, this support zone would actually need to adjust based on it. But if it doesn't, it applies, and yeah, that's about it. Anyway, thanks for watching, and I'll see you in the next one. Bye bye.